Good afternoon, everyone. Welcome to Stock Market Today. My name is Ken Shreve, joined by our news editor, Ed Carson. On today's show, we'll talk about another resilient performance for the major stock indexes after strong gains for the market on Friday, more strong gains on Monday, mixed, mostly unchanged performance today, so another constructive session. But before we get into the market action, let me throw it over to Ed, who's got three stocks to watch as usual.
Yes, good afternoon, Ken. We're going to take a look at three stocks. We're going to take a look at Paccar, Albemarle, and TJX Co's.
Okay, excellent. Well, let's start by taking a look at the S&P 500, which made a nice move above the 4,000 level yesterday and really didn't give up much ground at all today, Ed. Looks like at the close down about 0.1%. There are, reasons for the stock market bulls to like what they're seeing here. Do you agree?
Yeah, I mean, strong gains the prior couple of days for the S&P and the market in general. Basically held those gains today, and that's with all sorts of earnings coming over the next several days. Yeah, we had plenty of earnings today, but my goodness, the earnings over the next, say, 7 sessions, including Microsoft tonight, the Fed meeting next week on top of all that. So, yeah, I think this is pretty positive. The market held above the 4,000 level, held above here. I'll have to see how things go. If the earnings are positive, that's a positive sign. But this was nice action today.
Yeah, there's still a lot of potentially market-moving headlines this week and next week. We've got a key reading on inflation later this week on Friday. And like you mentioned, a bunch of good earnings reports. But it looks like Microsoft is trading higher after hours. Why don't we start by, let's just move over to the Dow Jones Industrial Average, which actually outperformed today, despite a weak earnings report from 3M. That was offset by pretty decent earnings from travelers. And you've got the Dow just kind of sitting right around its 50-day moving average here, Ed.
Yeah, so the Dow hasn't done as well in 2023 as it did in terms of its performance versus the other indexes after outperforming last year. It held the 50-day line, and so it was pretty nice action here. There was more action. It was a little bit more of a range than this, but still it was a pretty quiet range overall. Yeah, really calm action after some big moves the last several days.
Okay, and then NASDAQ Composite, it was only down about 0.3% today, again, after pretty explosive gains for the indexes for the NASDAQ on Friday and Monday. But we can see this, NASDAQ trying to break out over a trend line here, and it's still below that 200-day moving average, which may or may not be a wall. Like I said, we'll talk about Microsoft in a little bit, but that is up nicely in pre-market. If we get some nice tech earnings, Ed, it may not be too long before the NASDAQ can take out this 200-day line.
I think that's the big thing. Yeah, that's the big thing that's coming in. I mean, it's a reason to be building up exposure during this time, but doing it gradually because you just don't know when things might happen. And now, this is a real test. All the major indexes are coming here. It's all the storylines. It's like a movie where all the storylines come together. The technicals, all the earnings, the economic data, the Fed. So a whole lot of things are going to happen. Yeah, but if we get above this area and here, I think you can start thinking we've got a sustained rally, especially if that's like at the end of next week. If we're there, sort of clearly in this area for the major indexes, all of a sudden you might start thinking, hey, this rally could really have some life to it.
The action in individual stocks is certainly looking a lot better. Let's conclude by taking a look at IWM, the small cap tracking ETF. This is in a pretty good technical setup as well. Recent support near that 180 level, and really didn't give up much ground today. Looking pretty good technically as well.
Yeah, and it's right below these late 2022 highs. So they're all sort of doing that. And honestly, the Russell looks a little bit like a shallow cup with handle base, and a lot of handles are being formed over the past week or so. So that's been a positive. That short pause we had was really almost ideal, in that regard, because it gave just a little bit of pause to let market catch its breath, stocks set up. And, if we get some good action, a lot of positive things could happen over the next few weeks.
Very good. Well, we got that initial sign of strength by the NASDAQ Composite on January 6th, which put the market in a confirmed uptrend. And, indexes are still fighting a pretty good fight here from a technical perspective. All right, let's turn to some individual stocks. Actually, we want to just take a look at bond yields first. I know the 10-year Treasury yield that we track by 0TNX. Investors bought more bonds today, sending that 10-year yield lower. We did have some economic data that was mixed, I guess, plus at the open, but that Richmond Fed manufacturing index was not so hot.
Yeah, mixed to weak, and sort of seeing some of that going on. And I think the bond market is more afraid of the recession than inflation at this point. So weaker bond yields in some ways are a negative at this point, or at least it's not the same positive that it was, say, a couple months ago. So,
Right.
yeah, just something to keep in mind on that.
And then SMH, which we've been following, it's easy to see the NASDAQ start to a leadership position here, especially if these chip stocks can continue their outperformance. And looking at the SMH after that breakout from a cup base yesterday, really, really tight action, held on to a bulk of yesterday's gains. This is looking pretty strong as well. We've got several chip equipment companies reporting earnings this week, so kind of do or die time for SMH here.
Yeah, and some of those earnings are going to be critical. I mean, there's so many earnings, but chips all of a sudden are leading. I mean, they've broken out to new highs, and there's some that are really strong, but just looking at SMH in general, that is above the December highs. I mean, it's chips have been such a laggard, some struggling for so long, so this is really a positive sign. As you say, a lot of big earnings that are going to be really important to the chips and for the NASDAQ and the overall rally in the next few days.
Well, we put SMH on leaderboard yesterday on Monday, and we're very pleased to see the price action today, because not that long ago, when you see a big breakout from a base, it wasn't surprising at all to see violent selling the next day and failed breakouts, and so to see SMH hold on to those strong gains from the prior two sessions, just like the market, pretty constructive here. All right, let's first take a look at an earnings report today that caught a lot of eyes. Paccar, P-C-A-R is the symbol here. This is a maker of trucks and engines. Really, really solid breakout in a stock that held gains for most of the session here.
Yeah, and look at that volume too. I mean, obviously you often see volume like that on earnings, but really strong. And it was really a setup day yesterday. This was setting up. It was right there. You could see a trend line, short-term highs, retaking the 50-day line. So it was all primed to go. It was perfect because it actually hadn't broken out. Sometimes some of these stocks are breaking out just before news, and it's like, do you buy them? And then by the time you do it, not really a chance. It's still technically in range. It's not that extended from the 50-day line, but it's getting up there. There were chances to buy it, in here, or even as it crossed above the buy point when it was maybe a little safer, but really strong action. Relative strength line at new high. A lot of reasons to like this action today.
Yeah, this is kind of a tricky one, because even though it's at the top of the buy zone, you're looking at a stock over the past three sessions. It was a $97 stock last week, and three big up days in a row. So this is kind of tricky for growth investors looking at stocks that are still in a buy zone, even though they've stormed up off of lows pretty quickly. So could wait for a little pullback here, see if it trades sideways, but certainly a bullish move for Paccar today. All right, moving on to Albemarle. I haven't looked at this name in a little while. ALB. This is a big lithium play, crossing the 250 level, above the 50-day moving average. What do you see here, Ed?
Well, I mean, the lithium plays tend to have these big swings, and you can see them big ups and downs, even though they have some pretty strong and steady growth. So you could probably see this. It moved above the 50-day line yesterday, and then last night they came out with pretty good guidance for preliminary results, and then guidance for 2023. They see EPS at the midpoint up 747%. That was above views, and you're just continuing to accelerate. It's going to slow down next year because lithium prices are sort of stabilizing. But it seems that it's building. It could be building the right side of a base. But if you wanted to get into lithium plays, probably a place to be getting into them would probably be around the 50-day line as it's breaking above, an early entry, because these have a tendency to come back below the buy point. So this might be a safer area than trying to buy it closer to the all-time highs.
Yeah, that makes sense. I mean, it could face still some overhead supply issues as it works its way higher, but but kind of in this type of market, buying stocks early generally pays, as opposed to buying them when they're up near the top of a base. So, all right, that's a look at Albemarle, showing much improved price action. And finally, take a look at TJX. This is the parent company of TJ Maxx, Marshalls, Home Goods. really nice technical setup here. A breakout kind of fades down to the 50-day moving average, but makes a nice bounce today.
Yeah, and this buy point is still valid because it never even got close to the sell zone here. Found support where you'd like it to. It was added to swing trader, I believe, today during, when it sort of crossed probably around the 80, the 21-day moving average, and kept on climbing. It's now back above the old buy point. It's still close to the 50-day line. So this is nice action here. Still definitely actionable. There was nice volume a couple of days ago. This was nice support here, and then it didn't do anything yesterday, but it didn't do it on. The volume dried up relatively. So nice action. This one, I also like. This was just a tiny base, 5% deep, and the market was not having a great time here. And so you can see how the relative strength line skyrocketed while the stock went sideways. Nice flat base next to this, really, to a deeper base. It's a pretty classic setup in that regard. So a lot to like. And it's as reminders that even as some of the growth names come in, you probably want to have a diversity of leadership. I mean, let's say chip equipment names have some bad earnings. I mean, they might fall 5, 10, 15% over the next few days. You don't want to put all your money in chip gear or all your money into cloud computing. You want to have some diversity. And this is one, so you want to be looking at some retail, a lot of other sectors that are showing strength too.
Lots of outperformance among retail stocks. This is not the only bullish chart in the retail sector. There's pretty strong leadership throughout that sector, and that's one thing to be optimistic about the market here, is that we have seen leadership start to branch out and kind of covering more sectors and more industry groups. So, all right, well, it looks like we're getting more and more interesting stocks to talk about on the stock market today. Video market continues to improve. We did want to touch on Microsoft, which reported earnings after the close today. Looks like a pre-market gain. Are you still seeing the stock up or off highs, Ed? Haven't had a chance to look at the earnings report.
They're up 4%, and what's interesting is that the numbers were just slightly better than expected on EPS, and revenue missed. Azure, which a lot of analysts have been worried about, slightly beat views. It was not tremendous, and they haven't given guidance yet. But the fact that the market was relieved, I think this was one of the negatives that hit the market, a couple weeks ago. So for that to be up 4% on really what was just okay results, in some ways is a really positive sign as we really hit earnings season.
Yeah, and looks like Microsoft's aftermarket gain is fueling a 0.6%, gain in the NASDAQ 100 futures. So we'll see what it looks like in the morning. Ed, thanks very much for your input. That'll do it for today's show. I'll be back here tomorrow with Allie. She'll be back in the host seat. Until then, I hope to see you tomorrow morning for IBD Live. We start things off at 6:20 a.m. Pacific time every morning and go for about an hour and a half, just talking the market, trends, individual stocks, sector rotation. So if you haven't joined us yet, please go to investors.com/IBD Live and you can sign up for a trial. So again, thanks for watching. We'll see you back here tomorrow right after the market close.